All right, in this video, I wanted to take a look at a few things and explain why I sometimes close option trades early rather than letting them go all the way to expiration. So I get that question a lot. I do address that often in some of my videos, but unless you go through and watch every video I've ever done, maybe you haven't heard that. So anyhow, let's take a look at this screenshot here. So these are 3 trades that are currently ongoing. We have the double leverage Tesla, TSLL, cash accrued put at 15, SBUX put at 80 strike price, and then TQQQ strike price of 50. And these all are set to expire February 20th. Now I picked February 20th because that's a monthly expiration date. So in options, you have monthly dates, and then you have typically weekly dates, and then some of the highly traded ETFs or stocks have dailies. And since I like going out sometimes 4, 5, 6 weeks, it's kind of easy to pick a monthly date. And I do that because there's a lot of volume typically. So when I go to get out of a trade, the difference between the asking price and the mid price and the bid is usually pretty narrow. And then I can get the option trades filled quickly. So basically instantaneous. You click on the button and it fills immediately. So let's look at this a little bit closer. So you see the Tesla one, I'll call this Tesla even though it's the double leverage Tesla. It's not really Tesla. My total gain for this option is up 34%. The SBUX one is up 30%, and TQQQ, which is the triple leverage Qs, is up 27%. Over here, total cost basis, when I sold these puts, these were the dollar amounts that I earned right up front. So that was the premium I received when I sold these cash accrued puts. So this money went straight into my account the minute those trades got sold. And this is how many contracts, 5 here, 2 here, and 4 here. And this column here is what they're worth today. And this looks a little scary. This one's worth negative 340, and then negative 268, and negative 668. However, do some math. This is what I sold it for originally. This is what it's worth today. So here I sold high. And if I was going to buy these back, buy them low, I'd buy it back at 668. So if you flip that around, this is for somebody who doesn't really understand options. If I were to buy this for 668 today and wait 3 days and sell it for $925, that's a $257 profit. So with options, when you're selling options, you're doing it backwards. You're doing it reversed. I'm selling first and buying back later. So I'm selling high, buying low. If I close this today, my total profit will be $257. Now what this column is, because I already received that money, if I were to close this trade today, I have to give some of that money back. And people are like, I would never do that. I wouldn't give money back. I already made that money. Yeah, it seems a little against logic, but you got to look at the big picture. You're making $257. So when I sell these originally for $925, I don't run into the other room and tell my wife, like, I just made $925 in 30 seconds and celebrate, because I know what I'll end up making is probably half that, and I'm happy with that. I could make the whole thing if I let it go all the way till February 20th. But when I did this trade, that was probably 6 weeks away. What I did do when I sold this is I knew that I won't make $925 in 6 weeks. I'll probably make half that in 1 or 2 weeks. So that's how I think of it. Some people think differently. Some people say how wrong I am, and that's okay. They can call me wrong all day long, but I've been doing this for quite a while with a very high percent of success rates. I have had a few losses, and when I say a few, only a few, but they do happen. So getting back to this, as of today, this is what it looks like. So let's jump over to my spreadsheet here. So we have TSLL, SBUX, and TQQQ. In the spreadsheet here, if you've been watching my videos, you see the spreadsheet. So I do have 3 different accounts I trade out of, and this tells me what account I'm dealing with. And I can like sort this out kind of and hide some things. So I can click on like these ones here and then click OK. So this is called a slicer, and you can Google how to add a slicer. It's kind of like a filter, like a quick filter button for Google Sheets. And it will tell you how to set that up. And it filters out by this column here, which account. So this is just my JT account here. And that's the account of the screenshot we were looking at. So you see the 3 trades I was talking about, the TSLL, the SBUX, and the TQQQ. And you can see all those trades I open right here, the one on the 6th, and then one on the 7th, and one on the 8th. Today is the 12th, so less than a week ago. So the oldest one here is 6 days old, but they're all set to expire on the 20th of February. So my point is, let's look at the Tesla one here. Let's bring the screenshot back up. So you see the price here, it's $1.03. This is the price of the option. And right now, as of 20 minutes ago when I took the screenshot, it was 68 cents. So let's pretend I was going to close that now. So actually, I got here $1.04. So that might be off a little bit, but it's close. And would I just say 68 cents? So if I put 68 cents here, let's say I went ahead and click and close that trade, I would end up with $180. This is how close that is actually being true. TSLL, $176. So yeah, pretty close. So it says average cost basis. So 103 was the cost basis, and I had 104, so I need to adjust that. The SBUX is 193. I have 194. I think what the thing is there was a commission, a little bit of a commission that I had to pay, so it affects the price. And then the TQQQ, 231. I got 232 in here, so that's close enough. But then if you look at today's prices, the SBUX is $1.34. So if I put $1.34 in here, let's go ahead and do that, and then $1.67. So if I were to close all 3 of these trades today, I'd make $560. But I don't want to close those today. I want to wait. And just for fun, let's put in today's date, which is the 12th, and we'll see how much we would have made, like on an annualized basis, or how much would have made off our investment. So I'm going to delete this information because I'm not actually going to close those today. I'm going to let it go for a little while longer. Let's bring this back up. If this would hit 50% in the next few days, probably anytime this week, if any of these get to be over 50%, I'll start watching them closely. And what I mean by watching them, so I'll bring up the Yahoo chart here, and this is SPY. So let's bring up the TSLL. So in Yahoo Finance, if you have an account with Yahoo, you can create like a watch list here. So I have my watch list. These are tickers that I'm either trading with options, or I'm keeping an eye on somebody else I might know is trading them. So I'll watch them here for quite a while. I kind of check them every day. And then if they have a YouTube channel or whatever, I'll see how their trade is going and kind of confirm what they're showing is true, because I don't believe everything I see on the internet. So I'm looking for TSLL here. It's right here. So it's at 1912 right at the moment. So TSLL, it's loading. I'll click on chart here, and I've shown videos how to set this chart up to show the Bollinger Band and some different things. So this is the 6-month chart, 6 months right here. I have the Bollinger Band. So you can see that Tesla was like down here somewhere when I sold the cash secured put. So based on some recent action, it was up here. I felt like it was at a dip and was ready to bounce back. And I was probably looking at the RSI. The RSI was probably down here like in the 30s. I'm hovering over January 6th, and it looks like the RSI was under 40. And so based on this dip, I felt like Tesla was ready for a bounce back up. So this is the double leverage Tesla. But if you look at Tesla, the regular Tesla ETF or stock, the pattern will be pretty much exactly the same, except these bounces go probably twice as high and twice as low as the real Tesla. So the reason why I'm not jumping in today and getting all excited is because it looks like it's going to go up, in my opinion, a little ways further. Now, if I come back here to see when this last jump was, this was about a month ago. So it's possible that this could run up for the next couple of weeks. So for Tesla, I'm kind of thinking I'll probably be hanging on to that one for a few weeks. And it probably, even if it goes to 50%, I'll jump in here and watch this chart. When it gets up here above the 50-day moving average, 20-day moving average, gets up here around maybe $21, if it gets that high without dipping, then I'll probably think about closing it out, because it'd probably be getting close to another little peak there and do another dip. Now, this is just me thinking out loud, going on my hunch and some different things. So let's look at SBUX here and see what that might be doing. And I'll just put SBUX in the address bar up here. You can't see that because I got the page cropped. So when might I think about getting rid of SBUX? Actually, if you look at this, I should probably think about getting rid of it soon because it's way up here. And some recent highs have been about 89.50 to 90. So I actually thought it was down here lower. So I may think about getting out of that and wait for it to come back down here to about 85 again, and then selling another cash secured put at like 80, which is way down here. I may start doing puts around 82 or maybe even 83. Some recent lows have been 82.30, and these lows are almost 84. So I may wait for this to take a dip down to about the 20-day moving average, which is like 86, and then do cash secured put like at 84 strike price. So let's bring that back up for a minute and see what we're doing here. SBUX. So I got the put at 80. It was a strike price. I got about 30% return. So my fear is if I hang on to this one for another week, now if I hang on to it all the way till the 20th of February, I'm pretty sure I'm going to make my whole $386. However, I could close it now and wait for it to dip back down. So I made 30% of my money, wait for it to dip back down and do another cash secured put, and then expect it to bounce back up like it has been. And then, maybe collect another $100, $200 and do that 2 or 3 more times. Now, I could do that 2 or 3 more times and collect this times 3, or I could just sit and wait and collect the whole $386. I should say collect, just keep my $386 and not have to pay anything back. So that's one that I need to just think about. However, if it does come up here and starts hitting the upper Bollinger Band, which it's almost there, like it's come outside the Bollinger Band a couple times. I don't know what to do with that one. You'll find out maybe Friday when I update my option income video. So the last one here is TQQQ, which I'm not afraid to get rid of and buy back and get rid of multiple times a week. So TQQ is the triple leverage QQQ. So if QQQ moves 1%, this should move about 3%. So here's another one that's kind of like pushing its upper Bollinger Band limit. If I look at the RSI, it's 57. So if the RSI starts getting a little higher, it means it's getting overbought at certain points. That might be ready to turn around and do another dip. So once again, this is February 20th. And so that's like 6 weeks. So if I go back 6 weeks, that's almost like to December 1st. You can see since December 1st, it's gone up, down, up, like 3 or 4 times. So if I hang on to this for another 5 weeks, it could go up and down 2 or 3 more times between now and then based on, some previous action. So this is another one. If it gets maybe to some highs around 59 perhaps, or 58, the upper Bollinger Band is 57. So it's almost to the upper Bollinger Band now. So that's another one that I got to think about if it keeps creeping up. And so what was that price again? So I'm only at 27% profit here. So I'll think about it. The other thing I can do, since I got 4 contracts, if I'm kind of undecided, and this, let's say this goes up to 50% profit, I could sell 2 contracts and free up some collateral for something else. And same thing with the SBUX. I got 2 contracts. I could sell 1. Same thing with the Tesla one. I could sell like 2 to 3 of the contracts and hang on to half of them. I've done that before. So one more thing before I go. What makes this go up, my profit? So 2 things will make this Tesla option go up here. The first one is if this price goes away from 15 strike price. So the higher Tesla goes up, the more this will go up, meaning that the option value here will go down. Because remember, I'm looking to buy this option here. The price of Tesla does make a difference, but this is the number I'm looking at right here, the 68 cents. And like I said, I want this to go down because I sold it at $1.03, and I want to buy this as cheap as I can get it. So when this gets down like to 51, 52 cents, this number here will say 50%. And this number here will be approximately half of this number, like $257, $58. So the price of stock goes up, the price of the option goes down, which is good for me. The price, I'm talking about this column here, this goes down is good. This column here says gain needs to go up. So green is good here. So to repeat that part, the price of Tesla goes up, this goes down, that's good. The other thing that will make this go down, which is good, I want this to go down, is time. So the closer it gets to February 20th, the more this price will decay and go down, because that leaves less time for the price to move. So let's say TSLL is at $19 today. So if Tesla would drop almost 20%, that would be around $16, and I'm at 15. So let's say Tesla has to drop 25% between now and February 20th for it to come down this low and for me to get a sign. So that's quite a drop, but it could happen in 5 weeks. Now, let's say it's 2 weeks away and Tesla would have to drop 25% in 2 weeks to get to this 15. So the shorter time period you have, the less likely that stock is going to move 25%. And as it gets a shorter time period, it's going to cause this price here to come down, the price of the option to come down, which is good, which will make this go up, which is good for me. Unless, let's talk about one little thing real quick. Some people want to get assigned if they think this is a great price, $15 for the double leverage Tesla, which it is. If it did go down to 15 and I have to buy 500 shares because I got 5 contracts, $15 a share, that'd be $4,500. I would be okay with that. And I would just hang on to it. And Tesla's pretty volatile. It goes up and goes down. I may have to hang on to it for a week or 2 weeks. I could write cover calls on it on the way back up, but I know eventually it's going to go back up. So I would be okay with that too if I could get that for $15 a share. And the same thing is true with these other ones that I trade. So I'm going to wrap this up. It's gone a little longer than I planned, but I just wanted to kind of explain my thought process and some of the things that I look at. So part of this was to answer questions that I get in some of my comments. And I think this probably answered several questions from several different people, and I hope it helps. So we'll wrap that up and we'll see you in the next video.